Welcome to the finance edition of Pentacode. This is where I go over financial information and tips and tricks on how to better handle your finances to my viewers. Now, I've been studying finance and actually practicing finance investments for a couple of years now, and I can say I'm relatively successful. And I want to show you what I made this year as far as how my investments go. So if you guys like this type of video, don't forget to let me know in the comments below, and I will make more of these videos where I give out advices in the future. So without further ado, here's a video about my 2019 investments. So 2019 has been a crazy year for the equity markets. So if you invest in stocks, pretty much any stocks, you probably will see tremendous return because the market has go up so much this year. The reason is that last December there was a huge downswing in the market where there was a lot of money flowing out of the market due to the fear of recession and the trade war and etc. So at the end of 2019, around Christmas Day, there was a miracle in which a lot of money flew back into the market and the market started to bounce back up. So if you hold on to your money and didn't sell, you probably made all of your money back plus more. That's why 2019 is crazy, because there's been a huge turnaround, complete turnaround since that time. So here's what happened. The S&P 500, which is a portfolio of top 500 in the stock market in the USA, here's the performance of it. So at the start of 2019, it was about 240 points. At the end of 2019, we went up all the way up to 320 points, which is crazy. As you can see, on December last year, there was quite a bit of drop down here. But then the December 25th, it started to bounce back up. And ever since then, it has been going up with a little bit of volatility here due to trade war and Trump's tweets. But in the end, we break out of this top, and then now we're heading towards all-time highs. Pretty much every day on the stock market, you see all-time highs. Now, here's my return for Betterment. Now, if you don't know what Betterment is, it's a company where it will use robots to invest for you. So if you have some money, you can put the money in the company and they will invest for you to the market using their AI and algorithm and whatever. They take a small fee, but this is perfect for people who have no idea how investment work and people want to be like passive. So let the company handle your returns for you. So Betterment, I put some money in there, and since a year ago, the return was 23.19%. So that means if I put $100 in, I actually get $123 back. So that's a pretty nice return. However, this is actually underperformed the market because, as you can see here, the S&P 500 this year returned 36.58% of your investments. So we are actually underperformed from this company, but it's good to diversify. It's pretty much like you control how much risk you want to put in. The reason it's lower is because I have about 20% in bonds and 80% in equities. So here's the S&P 500 return. I posted this a couple of days ago. Is that my 29 portfolio stats is that I have 52.78% return on Robinhood. Robinhood allows me to pick stocks individually and invest money in it. So since a year ago, I have a 52.78 return versus the market average, which is 36.58%, which is extremely good in my opinion. The reason is that I'm pretty heavy in tech. So all the companies that are heavy in tech are like Amazon, Microsoft, nvda, Google, like big tech companies. I invested in those companies and I just let it run. So 52.78% is extremely good in my opinion. So if I put in $100 at the beginning of the year, I get $150 back. So my favorite was Microsoft. Microsoft was extremely stable, and it was a very like not volatile at all. So it's steadily going up all throughout the year. So my favorite is bottom line is Microsoft. Now there are a couple of missed opportunities. I'll talk about later, which is Tesla, Shopify, and AMD. They went up even bigger than the market return, even bigger than my return. So it's crazy. But overall, I went up 52.78% this year, which is I'm extremely happy about. Now my savings account, I put my money inside of a high yield savings account. It's variable rate, meaning the percent return is vary. So it changes throughout the year, depends on the Fed. So right now it's at 1.7%. Now this is still extremely higher than average. So if you go to like a Chase Bank, you actually get like 0.04% back. So this is orders of magnitude higher. So if you have some money, I suggest you put it in a savings bank. Marcus by Goldman Sachs is what I use to put my savings in there, and it's generating good money right now, risk-free practically. So I want to show you some of the equities that I missed. First one is Shopify. Shopify was crazy. So at 2019, at the beginning of 2019, it was worth $120 each. So by the end of 2019, it's worth about $400. So it went up almost 400%. It's very, very crazy. But I don't doubt the company, because everywhere I see is that young people starting companies, starting online stores via Shopify, because Shopify makes it easy for people to drop ship, to start an e-commerce store. So I can only see it go higher from here, because Shopify is starting their own fulfillment center to compete with Amazon. So I'm very interested to see like how this market will go, because eventually it's going to take a cut out of the pie from Amazon. So we'll see how it goes. At this point, I'm not going to invest in Shopify at the moment. It seems to be very high right now and oversold. But if it breaks out of this top, I will probably put some money in there. Now Tesla is another story. Here's a stock that's extremely volatile with an extremely volatile CEO, Elon Musk. But at the beginning of 2019, it's pretty high. It's like 375. But it kept going down throughout the year, all the way until mid-May, because Elon Musk started tweeting, and he started doing some things that traditional CEOs don't do. But by this point, Tesla was one of the most shortest stocks on the market. So it started like to drop a little bit here and there. And then all of a sudden, around early November or late October, the stock went up tremendously. The reason it went up crazy because Tesla had a profit beat. It actually made money on the third quarter of this year, which nobody expects. So as soon as it made this money, all the short sellers have to cover their losses, so they have to buy in. So this will trigger a avalanche of buys. So eventually, within like a month or two, from November to December, it went from 250 all the way to 429 today. So Elon Musk was joking last year about that, have taken the company private at $420 a share. So this seems to be, he's not doing that, but the stock price is going way higher right now. So if you invest in Tesla, congrats. And if you held on to it to this wild ride, congrats. And I will not invest in Tesla at the moment because it also seems too high. Now the third stock that I missed was AMD. So AMD started out in 2019 as around like $20 a share. So by the end of 2019, it went all the way to $45. So here's another story of the chip stocks. Chip stocks are very volatile, depends on the economic situation, such as the trade war. But right now it's steadily going up, but then right now it's going crazy to like $45 each. Also, I will not invest in AMD at the moment. It also seems too high. But the sad story is that when AMD was dropping so hard, like a year or two ago, when it was like $9 a share, I didn't buy any. I wish I could buy some at that moment because I will like 5x my return if I do it. So yeah, that's you can't catch them all, but it's good to see that these companies turn things around really quickly. So here's my investment plan for 2020. Is that my plan is to stay defensive. I want to stay 1/3 cash because you have to take profit as you make money. it's not your money, it's not profit until you sell your stocks and then you take the money. So I've been taking profit here and there, and so I'm like 1/3 cash in cash. So I have some cash ready in case the market turn around. So I want to take profit, and this limits the upside, meaning like I will make less money as the market keeps going up, but it defends me against the downside. So if the market do turn around, I will have I'll lose less, and then I can use the cash to buy equities at cheap. So you want to watch the economic and political climate, because 2020 is election year. Depends on the outcome of the election and what Trump does on Twitter. Unfortunately, that's the state of the world today. The market will respond. So you have to keep up with the news every day just to watch it. And you should always stay on top of earnings report for your companies in your portfolio, because you want to know what your companies are doing and when you invest in them. And lastly, you want to buy TVIX, which is a 2 times put hedge against the market. So if the market goes up, keeps going up, TVIX will lose money, will lose value, and it will lose twice as fast. But the reason, it's kind of crazy, it's kind of a gamble, but for me, I need to buy some insurance against the market. So if the market do go to recession, TVIX could potentially 10x or 30x my return very, very quickly. So yeah, that's about it. I hope you guys like this kind of video. If you want to sign up for like Robinhood or Betterment, I have links in the description. It is my referral link, but you do use it to sign up for the services. Let me know if you like this kind of video. I plan to make more of these videos to show you guys how to invest and how to properly handle your money, because I see this is a lot of things that people don't understand really well. So I want to share with you what I know. So until next time, I'll see you guys in the next video.